All right, let's dive in. Today, we're going to pull back the curtain on one of the most talked about and honestly, one of the most confusing topics out there, cryptocurrency. So whether you're starting from absolute zero or just want to get a clearer picture, we're going to break it all down for you. Let's get to it. First things first, let's just throw a number out there that tends to get everyone's attention. As of early 2026, this is roughly the price of one single Bitcoin. It's a massive figure, the kind that makes headlines. But, a big price tag doesn't even begin to tell the real story.
So that really gets us to the core question, right? Beyond the crazy numbers and the hype, what is this stuff? How does it actually work? And what do you really need to understand before you even think about getting involved? That's exactly what we're here to unpack.
So here's our game plan for this explainer. We're going to do this in 5 simple steps. We'll start with the absolute basics, then we'll meet the 2 biggest names in the game. From there, we'll talk about how you could start safely, get real about the risks involved, and then finally, figure out where this all might fit in your own financial world. Okay, section 1. What even is crypto? Let's start from the ground up and build a really solid foundation. At its heart, cryptocurrency is just digital money, but here's the key difference. It's not controlled by a central authority, like a government or a big bank. Instead, it's all secured by really complex math. That's the crypto part. And the whole system runs on a shared public database that anyone can see. And that public database has a name. It's called a blockchain. The easiest way to think about it is like a giant global digital receipt book. Everybody can see it, but no single person can go back and change an entry. All the transactions are bundled into blocks, and then they're chained together, creating a permanent record that's confirmed by a huge network of computers. That's what makes it so secure.
Section 2. Let's meet Bitcoin and Ethereum. Now that we've got the basic tech down, let's look at the 2 undisputed giants of the crypto universe.
Now, it's really important to get this. They're not really competitors because they're built for totally different things. Bitcoin was the first one, and its main job is to be like digital gold, a secure way to store and send value. Ethereum, on the other hand, is completely different. It's more like a world computer that lets developers build all sorts of applications on top of it using these things called smart contracts. And this chart just puts the sheer scale of these 2 into perspective. Looking at the numbers from early 2026, you can see Bitcoin's absolutely enormous market cap, which really backs up that digital gold idea. And then you have Ethereum. Even with a lower price per coin, its total value is massive because its network is the foundation for thousands of other projects. Let's move on to section 3, starting your journey safely. Now, for a lot of you, this is probably the most important part. So let's walk through a sensible way to approach your first steps. Okay, these 4 steps are your playbook for a careful start. 1. Stick to a major regulated platform. 2, and I can't stress this enough, only use money you are 100% prepared to lose. All of it. 3. Start learning about hardware wallets. They're little devices that keep your crypto offline, safe from hackers. And 4. Right from day 1, track everything. We'll see why that's so critical in a bit. And just to really hammer home that money you can afford to lose idea, here's what financial advisors often suggest. For a beginner, crypto should only be a tiny sliver of your overall portfolio. We're talking just 1 to 5%. That way, even if the worst happens, it won't wreck your main financial goals. And one more thing before we move on, and it's a big one. Your personal security is not optional. It's everything. Use a long, unique password for your account, and you must turn on 2-factor authentication. It is your single best defense. All right, section 4, navigating the risks. We need to be really clear and direct here. It's time to understand exactly what you're up against. You hear the word volatility thrown around all the time, but this chart makes it real. It is not unusual at all for major cryptocurrencies to lose 80% or even more of their value from a peak. We're not talking about a small dip. This is a catastrophic drop that can absolutely wipe people out. This space is also, unfortunately, full of scams. You have to be on high alert for these red flags. Look, nobody, and I mean nobody, can guarantee returns in crypto. If anyone promises you guaranteed profits, pressures you to act fast, or asks you to send them crypto to unlock some bigger prize, it's a scam. Full stop. Now, here is a critical fact that so many people miss. The money in your bank account, it's insured by the government. The stocks in your brokerage account, they have protections too. But the crypto you hold on an exchange, it has none of that. Zero. If that platform goes under or gets hacked, your money could just be gone.
And that brings us to our final section, crypto's role and rules. So, with all of that in mind, let's try to figure out where this technology fits into the bigger picture.
I love this quote from wealth managers because it just nails it. Think of your main investments, your 401k, your index funds, as a big, stable planet at the center of your financial system. Crypto should be treated like a tiny, high-risk satellite, orbiting way, way out there. It's an experiment, and it needs to be small enough that if it blows up, it won't throw your entire plan off course. So let's wrap up with 4 of the most common traps that catch beginners. Don't buy into a massive price spike just because you have a fear of missing out. That's FOMO. Never ever use borrowed money to trade. And like we said, don't get lazy with your security. And please, don't ignore the tax man. Speaking of taxes, the rules in the US are crystal clear. The IRS doesn't see crypto as money. It sees it as property, just like a stock. And what that means is every single time you sell it, trade it for another crypto, or even use it to buy something, that creates a taxable event that you have to report. And things are only getting more official. Starting around 2025 or 2026, all the big US exchanges will start sending out a brand new tax form, the 1099 DA, just for digital assets. It's a clear signal that the regulators are watching and that doing your taxes correctly is not optional. So, we end with a question for you. We've covered the what's, the how, the very real risks, and the rules. You now have a basic map to navigate this pretty wild territory. So the question isn't what is crypto anymore? The real question is, now that you know the basics, what role, if any, will it play in your plan? Thanks.